I would like to start by saying we are very pleased to report Q3FY18 results with consistent performance in a changing healthcare landscape. To begin with, I would like to welcome the announcement from the government, which will potentially make high-quality healthcare accessible to nearly 500 million people. This was, as we know, presented in the recent budget. And how does this impact HCG? With the expansion plan of HCG and creating the largest oncology network in the country, and also importantly, we being in the tier 2, tier 3 cities already, we believe we are very well positioned with our network and presence to cater to all sections of this society on a pan-India basis. Also, I would like to add that we are very excited about the prospect of our newest addition to the HCG family, created from the business combination of our Triestra unit and Stan Life Sciences to create India's leading specialty diagnostics company. This will redefine precision medicine with end-to-end expertise spanning bioinformatics, genomics, and research. We feel our focused approach in both cancer and fertility, and with a renewed positioning to tap opportunity in precision medicine, we are creating engines for focused leadership and sustained growth across each of our verticals. The business update for Q3FY18 are as follows. Growing strategic focus and scale across Maharashtra, Nashik expansion and launch of Nagpur and Borivali led to the region contributing 9% of the HCG center's income in Q3FY18 as compared to 4% in the corresponding quarter of the previous year. This is to further strengthen with upcoming launch of South Mumbai in Q119. Borivali Center operationalized with commencement of comprehensive radiation, surgical and medical oncology services all under one roof in large and high realization market. This is the only private dedicated oncology center in this area. Focus on continued leadership in East region with strong performance at Cuttack and Ranchi. Presence in the regions to be augmented further with planned launch of Kolkata Center in Q1FY19. Milan announced our fertility center group by Milan announced plans for new center in Whitefield area towards continuing market leadership in Bengaluru, which remains one of the most attractive markets for fertility. At this point, I would like to request our CFO Yogesh Patel to share the financial highlights. Yogesh.
Thank you, Doctor, and warm greetings to everybody present on the call. In terms of highlights for the quarter ended December 31st, 2017, our consolidated income from operations was 2,063 million as compared to 1,762 million in the corresponding quarter of previous year, reflecting to an increase of 17%. The consolidated profit before depreciation, amortization, finance costs, exceptional items and taxes, EBITDA was INR 319 million as compared to INR 277 million in the corresponding quarter of the previous year, reflecting a year-on-year increase of 15.3%. Operating EBITDA without losses from new centers was 309 million, translating to 18.5% margin as compared to 274 million in the same quarter of previous year, the margin being 17.3% in last year. The consolidated profit before other income, depreciation and amortization, finance costs, exceptional item and taxes, operating EBITDA was INR 261 million as compared to INR 260 million in the corresponding quarter of the previous year. Consolidated profit before taxes was INR 35 million as compared to 77 million in the corresponding quarter of the last year. Consolidated profit after tax and minority interest stood at 32 million as compared to 54 million rupees in quarter 3 of last year. With this, I'll request Dr. Ajay Kumar to take over for the operating highlights.
Thanks, Yogesh. I would like to draw your attention to slide 8 of the presentation. 20.5% increase in occupied beds on account of new centers impacting about 4% increase in the occupied area bed. ARPOB for existing centers at INR 33,667. Continuing reduction in ALOS to 2.40 on account of trend towards daycare procedures and changing patient profile. EBITDA margin impacted with scale-up and losses of new centers. Existing centers EBITDA margin improved by 0.4% at 22.3 in Q318 from 21.9 in Q317. Karnataka region continues its focus on improving realization parameters. The Center of Excellence in Bangalore, Q3FY18, ARPOB of INR 49.3 grew 13% year on year, and ROCE improved from 20.5 to 22.6%. Continuing drive towards improving quality of business, patient and service mix. With respect to Gujarat region, Baroda Center, Cancer Center and Bhavnagar Multi-Specialty continue to show strong ramp up. EBITDA margin of existing centers at 16.6% for Q3 FY18. In Maharashtra, comprehensive oncology services operationalized at Borivali Center, Nagpur Center continuing to ramp up. Existing Nashik Center EBITDA margins at 36% with strong growth. In East India, improved procedural mix and efficiencies in operations leading to optimal occupancy. Strong growth across both centers in the region. Coming to slide 10, covering key highlights of Milan fertility business are, we continue our plans to expand presence and saw a revenue growth of around 15% year on year. Milan ranked #1 nationally for the second consecutive year by Times of India, All India Fertility and IVF Ranking Survey 2017. We plan to launch a new center in Whitefield towards continuing leadership in attractive Bangalore market. At this point, I request Yogesh to explain the capex and debt highlights.
Turning your attention towards slide number 12, and continuing with our expansion plan, we have invested a total capex of rupees 609 million in the current quarter. Majority of that investment going towards HCG centers. A small amount of 20 million rupees was invested in the Milan center as well. The capex does not include the investment of 52 million which we have made in Africa subsidiary in the current quarter. With respect to debt position, we closed the quarter at a net debt of 438 crores, which largely comprises of vendor finance of 179 crores. The debt in existing centers translates to 719 million in the current quarter. I would like now hand it back to Neeraj.
Thanks Yogesh and Dr. Ajay for the financial and business highlights. We would like to open the call now for the participants to ask any question to the management.
Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. First question is from Sudarshan Padmanabhan from Sundaram Mutual Fund. Please go ahead.
Good evening. Thank you for taking my question. Sir, my question is around this Borivali facility. What I would like to understand is, if I go through the numbers, there seems to be a slight jump in your other expenses, which is why there is a decline, probably on the margin side on a year, on a quarter-on-quarter basis. I would like to understand in terms of revenue contribution from the Borivali facility, as well as what is the additional cost that we have incurred in the first quarter, and how do you expect in terms of utilization, where are we standing in Borivali, and how do we see the center contributing going forward?
As far as Borivali, I also have Dinesh here. So meanwhile, I would like to say that Borivali, really fully became functional only in October. And as I had repeatedly said in the past, if you recall, Sudarshan, that Borivali will take time because of the high rent and some of the costs involved. So as expected, we are incurring the loss, and we will continue to incur the loss going forward most of the year, although the cost is expected to come down. Regarding the ramp-up, Borivali is doing reasonably well, and it's actually, we have a good number of patients in radiation and medical oncology. Surgery is also ramping up. So we definitely, and the PET scan is doing well. So we definitely see a good ramp-up happening. But as I mentioned, the fixed costs are significantly high, which we knew right from the beginning. And so we expect this to continue for this financial year. Dinesh, you want to add anything?
So with the current run rate, we will see that in the next 12 months, we could probably look at an average of 100 plus patients based on currently what we're doing, with about 40 to 50% capacity utilization on the technology, which is currently running, which is a good sign, and we think it's going to improve.
And sir, if I'm actually excluding this Borivali out of the numbers, I'm just trying to understand what could be the EBITDA margin. Because we have been seeing a jump in the EBITDA margins as well as in sales. Would I assume that the entire drop is on account of only Borivali, or is there any other center which is?
Also Nagpur is a center. Nagpur and Kanpur both are in the early stages. So both are actually. So Borivali, Sudarshan, Kanpur, Nagpur, and yeah, go ahead.
So this is Yogesh here. So as you mentioned earlier, if you were to exclude losses from new centers, our operating EBITDA would stand at 309 million in the current quarter, at 18.5% margin.
And sir, with the coming south, the South Mumbai facility, do we see the South Mumbai facility to also be, in terms of cost or rent, as high as, probably this, Borivali facility, or how do we see that, sir? In terms of cost and in terms of structure?
So I think the model in South Mumbai is different, and it is also a inpatient facility is smaller, and it is more in terms of radiation and medical oncology, and the model with the partner is more of a revenue share model. So we will not be seeing this kind of an impact in the South Mumbai. And when we went for Borivali, we went for 100 bed center, and we wanted to make sure there is a dedicated oncology center with facilities for bone marrow transplant and everything else as we go forward. That's the reason we took on Borivali as a dedicated center. And in answer to your question, we don't see that much of fixed expenses for us in the South Mumbai.
So one final question from my side. If I'm looking at the three centers that has been added this year, that is Kanpur, Nagpur, and Borivali, most of them being more than 100 bed facilities or closer to that. And next year, whatever we are looking at, is or going forward is largely a 50 bed, 30 bed kind of facility, probably barring Nashik. I'm trying to understand, your debt, because more or less the big chunk of, the capex has been done and the facilities have started. So with the overall debt, would we assume that this should be the peak debt of HCG? Or
no, there will be, for example, Calcutta center coming, and we are also going to see the center in Delhi, which in the previous Delhi in the Gurgaon part. So those will be the two projects which will have debt component. But apart from that, at this point, we are not seeing that many debt requirement. And Yogesh, you want to?
No, that's Dr. and Sudarshan, whatever the centers are opening in Q4 or Q1 as indicated, those also have final certain equipment costs to be incurred still from that perspective. So we would have to incur costs for them as well, but between the next 2 quarters type of thing.
Yeah. But I mean, if you're looking at the debt versus these new centers and the old centers, I would assume that your debt in the existing centers should start coming down drastically, right? Because the existing centers is throwing a fair amount of cash.
So which it is, I mean, at least for this quarter, what we've reported, our debt in the existing center has come down. But as we were expanding, the cash generation is also being used for expansion in new centers itself. So from that perspective, we are right now not, effectively using that cash towards, bringing down debt from existing centers. But it has not increased over, last 4 to 6 quarters.
But also,
last quarter has been a decrease.
Also, please remember, Sudarshan, our model, there is a deferred payment and some of the technology we have. Some of that also will come of age, a 3-year deferred. So that will balance some of the cash flow which is coming into the system from the existing centers also. Okay?
Sure, sir. I'll join back with you. Thank you.
Thank you. Next question is from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening. Thanks for taking my question. My first question is on Karnataka. I think in the December quarter there was news around some kind of impact from the doctors' strike in the state. In spite of that, I think we've grown about 13 to 14% in the Karnataka cluster. I just wanted to understand what was the level of impact that you got from the doctors.
Chandramouli, we did have a significant impact. I think most of the healthcare facilities experienced, best of my knowledge, the same impact. And we had literally almost a month when the activity had slowed down. It was coupled with one healthcare-related KPMA Act, where several times IMA and related facilities went on a total ban. And also there was some other general ban which was not related to it. So this added to that. And so we did see an impact. And we do believe slowly we are recovering from that. As you know, also, when you look at year on year, there was, we did not see that much of demonetization impact last time. And now our base was high. And as most of the institutions saw some demonetization impact a year ago, November of 2016. So that also, our impact might not being there. Obviously, the base was a little bit higher. That is why, we are seeing this growth of what we are seeing Karnataka 13%.
Right. So going forward, I think in the March quarter, is it fair to say that most of the doctor-related strike impact is behind us now?
We are, as you know, we don't give any guidance, but we are hoping there'll be recovery for this March quarter going forward. And then, of course, we have to wait and see what will be the waiting period for people for this 5 lakhs which is coming from the central government. Will people like to wait for that, or what are they going to do? Because what we have been told is that will roll out only in October. And what will the state government do meanwhile is also we have to look at and see. The state government like Karnataka particularly, which is a different the government, Congress government, how will they react? What are the policies? Because they have their own policy, which was for 1.5 lakhs. So how will that mingle with the 5 lakhs, and what will be that? We are all waiting for clarity on this. So this is one thing, particularly our tier 2, tier 3 cities, where a lot of dependency is there on these schemes. We have to wait and see. So far, it's too early to comment on what is going to happen from that. Okay?
Right. Thank you. And my second question just takes me back to the startup costs this quarter. I can see on your presentation deck that there's close to 7 crores in startup losses from new centers. So I was just wondering if you could split it out for us. Is it fair to assume that most of the 7 crore startup losses from the 3 recently opened centers in Nagpur, Kanpur and Borivali?
Yeah, most of it is from those 3 centers, Borivali, Nagpur and Kanpur.
Right. And within that, would it be possible?
Borivali is the highest.
Borivali?
Borivali is the majority. Yeah.
Majority of the 7 crores is in Borivali.
Yeah.
More than 50%.
I would say 50%, about 60% is from Borivali, and the other major one is Nagpur, and then about 15% is Kanpur. Okay.
Perfect. Thanks. And just one last one on recently announced deal with
Yeah.
Strand. So I was just wondering, in the sectors that you hope to play within specialty diagnostics, are there any established players out there in the Indian market? Any peers, just for us to get an idea on how the marketplace is?
Yeah. See, there are freestanding centers which deal with the genomics and others. But one of the things we have done is an end-to-end solution where we have ordinary lab and where we have immunohistochemistry and where we have genomics. Not only that, we have probably I consider personally a global leader in bioinformatics. That is what Strands is. And we are now creating a biorepository. So this, I believe, is a very big value creation for us. And as we go forward, we will see that why we believe is a value creation and why there will be enough interest from the investors and also to the patient particularly, as HCG is very patient first, it will be an enormous benefit, one-stop shop where we can review the pathology, the staging, and come to a solution where our multidisciplinary clinics will include the molecular pathologists, the genomics specialists, everybody to give a decision on the treatment. So we are looking at this not only in impact in India, but we believe there is enough interest even outside India to use this kind of services. And I think the research and development, what this Strands can offer, as you may know, this is initially a group which came from Indian Institute of Science. Scientists, professors, AI professors. So it has got a lot of intellectual capacity. So with that and what Triesta can offer with the biorepository and the molecular diagnostic and the data. So as we collect this data together and mine this data and analyze this, we can, as an oncologist, my hope is we can become a global leader in research and discovery of new treatments also.
Great. Thank you so much. I'll join back to you.
Thank you. Next question is from the line of Amish Kanani from JM Financial. Please go ahead.
Hi, sir. Sir, I have two questions. One is this, the new scheme that the government has announced. If you can give us some sense of, whether, the specialty that we cater to oncology, whether it's a large opportunity to, cater to that in the sense that what I understand is there are few diseases and few, hospitals which will be recognized for, getting the benefit of this product, benefits of this government program. So how are we placed there? And do we have the experience of dealing with this type of scheme in terms of getting the money back? Because the receivables are generally,
Yeah. See, we have been dealing with schemes in a few states. Just to give you a background, you look at Andhra Pradesh pioneered the scheme, and then came states like Tamil Nadu, Karnataka in various forms, and then Maharashtra, Gujarat. All of them have different schemes, different reimbursement methods for. I'm talking about for tertiary care, particularly cardiac and cancer. But this has been mostly a state-run initiative, and they may be getting some help from the government. And Karnataka initially got help from World Bank, but in all, it was not a program which really truly reimbursed, and it was only for below poverty line people. And we were going to government hospitals now, which are heavily crowded, moving to the private enterprise, so the footfall potentially may increase. So this is what could happen, but of course, we cannot definitely say it will happen, but this is our feeling at this point. So we will study this more in detail. we'll keep you abreast on quarterly earnings, certainly on this situation and development.
That was really helpful, sir. And sir, any plans about the expansion that we see in our press release and investors communication about only up to FY19. So any plans now to grow beyond FY19 and 20, or are we looking at consolidating our position?
Yeah, we are definitely consolidating. But strategically, if there is something which we feel and our board feels that we should do, we are certainly open for that. At this point, obviously there are strategic opportunities, other opportunities there. In almost every week, like I say, we get about 2 or 3 requests. We are looking at in future also creating a hybrid where instead of doing heavy capex ourselves, is there a possibility we can do more of a O&M and more of a training program? Because there are a lot of globally, not only in India but Africa, I recently came back from Southeast Asia, everywhere. There is a need for intense training, giving the know-how about oncology and getting involved, how we can structure that. So we are also looking at those things with maybe some capex or some JV investment. So these are all the possibilities where we feel there is a need, and we do present periodically to the board on the strategic initiatives and get their input, and based on that we'll be working in the coming new year also.
And sir, just to clarify here, when you're saying strategically looking at it, were you also mentioning you're looking for some M&A opportunities, or you were referring to some internal business?
Oh, M&A opportunities, of course, like we did strategies, the stands and all, there is, but we are mainly looking at O&M opportunities, and obviously some M&A may come, and strategically we'll take it to the board at that point and decide.
Thanks a lot, sir, and all the best.
Thank you. Next question is from Rishabh Verma, from an individual investor. Please go ahead.
Hi, sir. Thank you for taking my question. After that, you have been seeing many private hospital groups getting into oncology, and they have good expansion plans as well to add the bed capacity. And most of the private players have access to similar technology. So according to you, why do you still believe HCG will be the preferred destination for a patient?
Yeah, I think obviously these questions come across a lot of time. Mr. Rishabh, along with a lot of investors also, Rishabh, they ask us this. And see, the way we feel is we are, as Harvard Business School called us, we are a focused factory approach. See, if a hospital, a multi-speciality hospital has a oncology division, the patients who come to that will be from that multi-speciality hospital, majority of the time. So if you look at a 200, 300 bed hospital will not be generating that kind of huge oncology base. And if you look at the outside referral, how any outside referral will come to multi-speciality? Rarely. Because most of the specialties, whether it is a private doctor, nursing home doctor, or a non-oncology hospital, will not refer to multi-speciality because they go into the system to check their diabetes, blood pressure, heart disease, everything. I used to call this in my practice as Mayo Clinic syndrome. You go to Mayo Clinic, you get everything done. So I don't think patients will be referred, but when you look at a focus factory, we believe it is like a multi-cuisine restaurant where you have Indian, South Indian, North Indian, Chinese and Italian. Whereas if you go to only pizza maker, you think the pizza will be very good. So that is or you go to some North Indian only making palak or something will be very good. So we are like that. We are a focus factory approach. And we believe we are very good in that. Our outcomes, if you read the Harvard Business School, we are a value-based healthcare provider. A value-based healthcare provider is something which costs $10 in US, maybe $7, $8 in Europe. We are doing at $2, $3, which is written up by HPS, Harvard Business School, getting the same outcome. So we measure the outcome. That is our greatest strength, and we look at the outcome to meet the global standard. You're right, technology may be available, but the know-how, using the technology, the expertise, the multidisciplinary clinics, I can go on and on, how to do personalized medicine. So this kind of in-depth, analysis and doing for even complicated cases, honestly, you will not find in a multi-speciality. Routine oncology can be done, but what we are specializing in also is recurrent tumors. My specialty itself is, for example, advanced and recurrent tumors. People come from Middle East, Africa to my clinic on Tuesday. So those are the ways you become a center of excellence and an institution, research, biorepository, which I mentioned. So I think going forward also, even though there may be oncology centers, I feel we will continue to grow. An outstanding example I want to give you, which is over several decades existing, is where I trained in MD Anderson in Houston. When I trained in late 70s, Houston, there was only 1 or 2 cancer centers. MD Anderson was the mecca. But today, if you go to Houston or Texas, there are so many centers, like you said. But today, MD Anderson sees far more patients than what it saw in 75. So that is a testimony to what happens when you have a dedicated cancer center. And also, we are also leaders in first one to introduce a lot of technology. And when we take a leadership role, obviously people look at us as an oncology leader also. Others follow us, like CyberKnife, tomotherapy, NGS. So we have established ourselves as a leader. So obviously, when patients may go for a first time to a cancer center, to a multi-speciality, when the cancer recurs or they have issue, they will obviously come to the center of excellence. So that is also something we specialize in. Okay? Anything else? Innovations, yeah. And innovation, we do prosthesis, we did a voice prosthesis. So there are a number of things for which we are known, which I think will continue to attract oncology patients and related people.
Thank you for the detailed explanation. Just a follow-up question.
Mr. Verma, may we request you to return to the queue for your follow-up questions, as we have several participants waiting in the queue for their turn.
Just a follow-up on this question, just to, if it's possible.
We would
okay, you can go ahead.
Okay, thank you. Just wanted to assess if you have done any market share analysis in terms of number of patients registered for cancer all India and then number of patients getting registered in HCG, just to give a trend analysis last 5 years so that I can just get an assessment. Where does HCG stand?
So we are a number of patients, I can tell you, when we went public, we were seeing about 37,000 new patients. And Indian scenario at that time was we don't have a cancer registry, about 1.5 million new cancer patients. Today, we see approximately about close to 60,000. We will be completing the number here and we will know better. 60,000 new patients. So that is the number, and as more centers open, obviously, and the centers mature, we'll be seeing a lot more. And we hope it will someday, soon enough, it will be about 90 to 100,000. Okay?
Thank you.
Thank you. Next question is from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks for taking my question. Doctor, from your perspective, when you take a 3-year out view now, what are the 3 or 4 primary strategic objectives that you're focusing on for the business?
Yeah, I think one of the things we look at is when you look at HCG itself, with, as I mentioned, 60,000 growing. One other thing we look at is to obviously each center maturing and doing the capacity utilization. And nowadays, strategically, one of the things we are looking at is more and more outpatient therapy. I know most of the analysts and most of the financial market, first question they ask me is how many beds. So we believe we will change the mindset of all the analysts going forward, asking about more about footfall rather than the beds. Because as technology improves, as the care becomes like in the 10 years ago, chemotherapy was mostly 2-day, 3-day infusion inpatient. Today it is 80% is outpatient. So our focus is to reduce the ALOS, make it more efficient, That I think will reduce the number of beds as we go forward, and also technology using IT to create, which we have done virtual tumor boards, and having importance, to the subspecialization in oncology, like specialists in lung, sarcomas, breast cancer, which we have already done in centers. So these are the ways, and data collection. This is one of the things I believe, particularly with strands coming on. These are the things which will be important for us strategically to become a leader and continue to keep the leadership role as we expand the number of centers. And we are also looking at strategically, we have a center in Kenya. We want to look at outside India also in a very programmed way. Okay. I don't know what happened.
Does that answer the question, Mr. Agarwal?
Hello.
Mr.
Yeah. Can I ask one more? Doctor, in terms of your, over the last few quarters as the network has grown, how have, what's your experience been in terms of the network's ability to attract clinical talent from outside and from India onto the network?
Yeah. No, we have from India and outside we attract clinical talent. For example, in Mumbai, in Borivali, right now we have one of the leaders in India in radio surgery, who is now performing very well there in terms of radio surgery. He is actually a identified trainer for one of the manufacturers of particular radiation units. So we certainly have talent, and also significant number of people who do want to come back. And in Bangalore, for example, we have MD PhDs who are returned from UK. Recently, I met a pediatric oncologist, which are hard to come by, who was returned from US. Our liver transplant person is a board certified from US. So there is enough talent which is willing to come back. And sometimes the difficulty we have is most of them want to stay in big cities. So that becomes a problem how to do that. And in Calcutta also we have a surgeon who is returned from US, very well qualified. And the Nagpur Center, the US medical oncologist joined. So I think one of the things when you look back, Nitesh, is why did we all go to US abroad to train and get better knowledge. Today, and why some of people were not coming back is because the infra was not there. Today we have good training, so very little need to go abroad. But people who have gone abroad, when they come back and see what kind of infra we have, we are also, by the way, hiring a person from UK in May who is joining as a very big bone marrow transplant specialist. So today, when they come and see the infra, but unless they come and see, they don't realize. When they come and see infra we have and it's equal to or better, that's what this MD PhD doctor said, it's better than his UK practice. So I think we're going to attract more as the awareness becomes more. I don't think we'll have a problem for talent.
Okay, thank you.
Thank you. Next question is on the line of Rohan Das from Batliwala and Karani Securities. Please go ahead.
Yeah, hi. Thank you, sir. So I had one question only, and it was pertaining to your consolidated other income. And I see that it's gone up quite drastically in this quarter. Is there any specific reason for that you can provide?
Yeah. Yogesh, consolidated income.
That is primarily because of two reasons. It comprises of interest on investments what we have, and there's also a component of write back of certain liability which we had created in the past, which was a one-timer.
Okay. What were these liabilities exactly, sir?
So these were certain liabilities which we were for a software vendor, which we were waiting for settlement, which kind of contributed in the quarter with the settlement.
Okay. Thank you, sir.
Thank you. Next question is on the line of Lala Ram Singh from Vibrant Securities. Please go ahead.
Hello, doctor. My question is on the proposed transaction where we are acquiring a clinic from, I think, one of the promoters. So can you just throw some light on that transaction?
Yeah. We have Dr. Gopi Chand, who is been with us for the last 10 plus years. And he was our partner for radiation medical oncology, and he had a dedicated oncology center in Vijayawada. And the center has grown, and he had originally 35% partner in that. Pre-IPO, he merged the 35% into our HCG, and he is also a promoter now. Now he would like to merge his surgical division, which is private and freestanding oncology, and he is a very well-known, well-recognized and quite famous surgical oncologist in Vijayawada region. Particularly with the division of Telangana and Andhra happening, we are going to see significant growth in that region. So consolidating the two together and making it a dedicated comprehensive center where he'll be full-time working with us, and he'll build a team of surgical oncologists, and in Angol made sense to us also when he approached us. So with this, we believe, I think it will have a significant positive effect on HCG growth story in this region.
Okay. Can you share some numbers for that particular business?
No, at this point, we are unable to share any numbers in this. It's work in progress.
Or maybe, okay, maybe some valuation, what we have paid in terms of, if you can, no?
No, this is not finalized yet. We are just getting the board approval. We'll be finalizing, and we'll be putting it out the right time. For the shareholders' approval, it will come. Okay?
And this entire consideration will be in the form of shares of HCG?
It will be a combination, both some shares and some cash.
Okay. But the amount would not...
It will be over a period of time.
Okay. Second question is with respect to our Gujarat geography. I think it has relatively lower margins compared to other, because I think we have their multi-speciality hospitals apart from the cancer centers. So do we see that that geography can achieve 20% plus margins going forward?
Bharat is also here. I will ask Bharat also, but what I would like to say is, we have certainly come up from a few years ago. We are at 11-12 margin. We have improved, and we are looking at improvement in the revenue in the Gujarat region, particularly the multi-speciality. But the challenge we are having is, as you know, Gujarat has got this scheme, MAS scheme, which is consuming lot of cardiac work. And so the margin again may be limited because of that. And those are some of the challenges, Bharat is facing. Bharat, if you want to add anything.
And this visiting doctor, so we are trying to convert it to full-time model. That will also ramp up our margins.
Okay.
We are working.
The Q3 was 16.6.
Correct.
Okay. Okay. And my last question was actually around the business model of HCG. So I wanted to understand how does our business has a star doctor sort of risk, which a lot of these multi-specialty hospitals have, or we are more institutionalized? So how dependent are we on the star doctor, star surgeon in each region?
We have articulated this in the past also. See, HCG is an institution. We are an institution based, like I told you, where I trained MD Anderson. The model is very clear. The patient should come to HCG, and we create star doctors. Actually, that is our model. We do train, and we bring in doctors who have talent. Like this doctor Vijay, who came from UK. Just to give you an example, he is not even from Karnataka. He is originally from Assam. He was in UK for 10 years. He came. Within a matter of a year, he has become very busy. His patient load is good because his training, his background, and what HCG culture is, also into research. So this is what we like to do: create leaders, create star doctors, if you want to call them, for the future. But one of the things is we also have a model where we offer them a long-term full consultancy. Sometimes they can even become full-time employee of HCG. They can even offer some ESOP shares if they qualify. So, and also we empower them. So as you know, very few doctors in our top top doctor level leave and go somewhere else. So this is what we take a lot of pride in, and I think this will continue to do well with the type of program we have and type of empowerment. And we are also encouraging doctors. We identify doctors who are interested in R&D work, research work, and give them enough time during the clinical practice so they can spend few hours a day on research data collection. And we have one young doctor, Lohit, who actually has become very well known for radiogenomics. In fact, we have signed an agreement, I don't know whether we announced quite a month ago or so, where we are a sole person in India to do radiogenomics with a group in US.
Okay.
So we are into all that to see, we nurture them and so they are empowered. So this is the model we have created and working well so far. Okay.
Okay, thanks. Thank you.
Thank you. Next question is from Bhagwan Chaudhary from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity. Doctor, as your previous new centers has been break-even in very quick times, including the Baroda and Bhavnagar. So what's your view on these three centers which has come up recently, Kanpur, Nagpur and Borivali?
Yeah, like I tried to address before, see, Borivali, I always said that it will take more than a year because of the high cost of operation, the fixed cost, particularly rent. And knowingly, we have entered Borivali because we felt it is prestigious, and Mumbai being the first dedicated cancer center is very much of a need, and also for HCG it's very important. So it will take certainly more than a year. It may take over 2 years. So we are, but one positive thing is it is certainly ramping up well, little bit maybe ahead of what we projected. So we are very happy about it. Regarding Nagpur, again, it will take, for example, it's a big center. There is also a rent division which is there. So in view of this, it may take about 18 months. Dinesh, you can answer that.
From the start of the project.
Yeah, from the start of 18 months. And regarding Kanpur, I think it is coming close to breaking even. One of the things in Kanpur is we find that it is very heavily with the schemes, ECHS and all. So we are trying to slowly enter. Slowly enter that, where we are dealing mostly in cash patients. So part of the reason it is a big recovery is good, obviously. So we are trying to establish a brand and work on that. So it will take, I think in the next 6 months, possibly it will likely break even. Okay.
Okay, thanks. And secondly, this the upcoming centers which are likely to come in FY19, 2-3 centers, including this South Mumbai. What kind of model they are having? Means the different from this rent cost, or how will that be?
We don't buy land anyway. You know, it is a rent cost. But in the model in Calcutta, for example, and South Mumbai, both are more of a revenue sharing model with very little rent, if at all. So Calcutta is very rent. But rent is not very high. Yeah.
Much lesser.
Much lesser than Borivali, Calcutta. So there I think we also have a solid partner with Echo Labs, and who already have an existing PET scan. There is a lot of awareness about cancer. So we feel we should do fairly well there. Hopefully break even like normally we do within a year. In South Mumbai also we expect, because there is a revenue share model, even though it's in a very prestigious area, Cooperage, we are very fortunate to have a partner with Kupchandani and work on the ICS facility there. With that, we expect also to break even in a year or a little over a year.
Okay, thanks.
Thank you. Next question is a follow-up from the line of Sudarshan Padmanabhan from Sundaram Mutual Fund. Please go ahead.
Thank you for taking my question. Sir, I would like to understand, the restructuring which is being done in Trichy. What is the kind of impact it is, having on the top line as well as on the EBITDA in this quarter?
No, there is absolutely no impact at all. And we had an issue with the unit and the type of patient schemes and how to do. It is an implant model, so we are pretty much getting out of that. So we do not see any impact at all, zero impact on it.
But this base would have been in the previous year, right? So to that extent, your growth would have been, much higher if you are not,
So it was not really contributing.
Yeah, in terms of value, it was very minimal value. And from a restructuring perspective, we just wanted to be more efficient.
It was actually running under loss technically.
Which is what getting avoided.
Okay, how much was the loss? I mean, would it be meaningful or it would basically make...
No, not meaningful. Break even to 50,000, 1 lakh like that.
Okay, sure. Sir, another question from my side, if you can give some, idea about, this Triesta and, the combination which you have announced. I understand that, the combination brings a lot of focus into data management. But if you can tell us, if I'm looking at the next 2 to 3 years with respect to your diagnostic business, I mean, how does this combined entity, look in terms of revenue potential and in terms of harnessing the market, which, basically stands in terms of opportunity?
Yeah, we obviously expect the revenue to grow significantly. And as far as, the Sudarshan, as I said, HCG is a focus factory approach of oncology. What we needed was a focus factory approach in the cancer high-end diagnostics. And that is what we have created and coming with very good people, scientists, and have done a lot of innovations, lot of research, a big R&D department. For me, for example, I'll tell you, to go and do something like scans would have taken a decade or more. And to get somebody like that with our aspirations was on the similar line. How can we leverage HCG data, biorepository and combine the two? So it was like a made in heaven for us to find that this group is there who are willing to work with us and who have already become recognized globally in bioinformatics. And without making any names, I could say there were a lot of other global leaders who were interested in what is the strands model, how it works. So I think we have certainly, I believe at this stage, we have hit upon something which will be very credible, which will create value. So when you look at growth of these kind of companies, which are lab, diagnostic, biotechnology, R&D, all combined together in a focused approach, so what we have to focus is on value creation. And I think that is what we are going to create here, value creation for our shareholders and investors.
Sure. Thanks a lot, sir.
Thank you. Next question is a follow-up from the line of Rishabh Verma, an individual investor. Please go ahead.
And we should make this the last question. Is that okay?
Yes, sir.
Yeah.
Thank you for the follow-up. Hi, sir. I just wanted to know what's your take on the Clinical Establishment Act, which is going to be implemented by various states going forward, and how much can it impact our top line and margins?
Yeah. No, only during the disturbance we saw some issues, and now the Clinical Establishment Act, I can speak for Karnataka, has not yet come into full force. It may come sometime in the February is what they're saying. So if it comes, as you know, we diluted it quite a bit. The entire medical sector fraternity went on a strike, and we did a lot of things, a petition to the government. We even were willing to go to the courts. So government finally buckled down and they diluted it. So there is one important thing is there's no price fixation. Okay? And it has got to do with patient complaints and some transparency which was already existing. So it is being strengthened. And the medical negligence or strengthened. So I do not see much of an impact on our functioning, and we are not seeing any impact now. So, but as I said before, we have to see with new rule, new insurance scheme coming, what will be the impact. That we need to wait and watch. Okay.
Okay. Thank you.
Okay.
Thank you. Ladies and gentlemen, that was the last question.